pleased today to be joined by two experts in Bitcoin and the broader digital asset space. First, we have Tuur Demeester, I think one of the first Bitcoin analysts, and over the years, I've really appreciated the economic and historical perspective that Tuur's analysis has brought to Bitcoin. Tuur also serves on the board of the Texas Bitcoin Foundation and acts as an advisor to a number of leading entities in the Bitcoin space, including Blockstream, Unchained Capital, and AnchorWatch. Alongside Tuur, we're happy to welcome Adolfo Contreras from Blockstream's business development team. Adolfo has worked closely with a number of Bitcoin and Liquid projects in Latin America and Europe. Tuur, Adolfo, welcome to Bitcoin Capital.
Thank you very much. Thanks for having me.
Thanks, Jesse.
All right, so jumping into it, one of the topics I wanted to cover today is how Bitcoin-based technology can help unlock the value of untapped assets and then translate that into usable capital. So Adolfo, this is something that I know you've done some thinking on, and maybe starting from a really high-level perspective, why does so much of the global South seem rich in resources but poor in capital?
Yeah, well, it has to do a lot with Nick Szabo's writings. You know, I'm a great fan, and you know, Fernando, our marketing director, will laugh at me because I always quote my favorite authors. But Nick Szabo is definitely one of them, and he's always been speaking about how the problem of scaling trust, right, and the fact that we are wired to trust only a few people within our family or close ones. There's even the Robin number that estimates that we can only trust as much as, on average, 150 people. And the point I'm trying to make is that historically, the way we have tried to scale trust has been by using what Szabo and others call trust hubs. So basically connecting my network to yours, perhaps, through protocols and rules that both your network and mine accept and find legitimate. And those trust hubs are what are called institutions, actually. So human-devised protocols and rules. And but the problem is that these institutions have taken a really long time to evolve. So, and in fact, it has only happened in the countries where we called the West, that these institutions have evolved enough to scale that level of trust. But these institutions not only have evolved in the West, but also they require a lot of bureaucracy, a lot of lawyers, a lot of regulations in order to keep scaling that trust. And that has not happened in a lot of countries, what we currently call probably the global South. And those countries are characterized because they have a huge informal economy, right? So they actually have transactions, they have wealth, they have assets. But these rights and obligations that they have, and they recognize to each other, and the fact that they also recognize who owns what, is not translated from that informal economy into the formal one, which has a legal infrastructure, regulatory infrastructure, and enforcement infrastructure. And therefore, whatever is wealth and assets within that informal economy doesn't get translated to the broader world, right? To the broader investors, and it cannot be used as collateral. So even if you own land, if you own a business, and everyone within your community recognizes you to own it, you cannot use it in the broader world, right? And even if you want to connect with other entrepreneurs, they will say, okay, how do I know it's actually yours? They will not know. And that is the disconnect that Szabo and other people were working on, which I find is super fascinating.
So what role can technology play in helping to solve this problem?
Yeah, so the idea, there was an original idea, but the main topic is that you can use computer networks to translate basically these rights and obligations into code. I don't mean by that it's something that we should think of as straightforward or easy or cheap, and it's not even going to happen with every single right, obligation, and asset within the informal economy. But there is reasons to believe, and also based on the work by Hernando de Soto, this Peruvian economist that worked a lot along these lines and these ideas, that we can basically connect this informal economy and in a legitimized way, so that the owners of these assets and businesses understand that these rights and obligations are represented on tokens, if these assets are, of course, possible to be digitized in the first place, of course. And by that, through computer networks, they can be connected to investors worldwide. That is the main idea. And let's say there are many connotations and details that need to be ironed out, but that is the main idea, so to say.
Go ahead, Tuur.
Yeah, as Adolfo is talking, I'm reminded that about 12 years ago, I was writing for my newsletter, and I wanted to explore investing in Zimbabwean stock because they were going through hyperinflation, and that's usually a time when stocks are really trading at very distressed prices. And I tried to get through to it turns out that the National Stock Exchange was closed for months and months on end. And then, but the companies were actually interesting. Like the PE ratios were incredible. Like I remember, I think it was like a beverage company I was looking at. And they were like, I mean, you're talking about like a zero debt economy. Like it's like just cash only, and I couldn't get through. And eventually I did talk to someone who occasionally invested in like African, based equity. And he's like, it's almost like startup investing. Like you have zero guarantee for liquidity. And there's just so much political risk as well. And so it's like everything that what I was hearing is I feel like is agreeing with what Adolfo is saying. You have high local trust, but then it breaks down once you try to reach that corporation because of red tape and dysfunction. And so, yeah, I mean, I know that when we talk about Bitcoin mining, we're talking about stranded energy. And in a way, maybe we have loads and loads of stranded equity all around the world that is looking for to be connected with the world of capital.
And this what makes me think is, do you need a regulator in there to kind of help set the rules of the road and to define how the game is going to be played? Because I think that's one of the big difference for me between security tokens and ICOs is I think when ICOs first came out in 2016 or 2017, I think everybody was very optimistic on this, and we probably massively underestimated the inclination for people to do, kind of nefarious things and just to, take people's money and not live up to the obligations. And the difference with security tokens is you have clearly defined rights and obligations. So is there, my kind of thought that you need a regulator in there to help kind of police this and make sure that the rights and obligations are there for the investors and the issuers?
Yeah, if I may, I'm one of the original ideas was to connect that kind of regulator, which we could call an institution, an evolved institution in the West, with users worldwide. And if you think about it, stable coins do something very similar, which is connected a reputed institution, which is the Federal Reserve, with users worldwide, right? And so what you're describing, it sounds to me like the original idea that perhaps there would be regulators in developed countries that could do that kind of job that you're describing to these companies and users in developing countries. But the truth is that what I'm seeing is different. What I'm seeing is that there is an arising opportunity for those countries and jurisdictions with the vision to become that kind of institutions. And the reason why I think this is the case is because in the West, the incentives to carry out this process are way smaller than in these other jurisdictions, because they have a legacy system. They have laws. I mean, let me step back to explain this point. Laws are the replacement of the lack of security, right? They were born to replace the lack of security. And then if you want to replace that lack of, let's say, of laws, or the need for laws, you need to a totally secure system. You need a very secure system. So if you have the laws in place, you don't need to build something like, let's say, advanced or secure to bypass what you already have in place. You already have the regulators, the lawyers, and all that. So I don't think it's going to happen with these evolved institutions in the West. What I think is that if perhaps countries like El Salvador and others start having this vision and understand that, yes, there are trusted third parties that will be needed, like a regulator, why not taking that place, taking that role, and fulfilling that service for as many users worldwide as possible? And this is what, for me, is the most interesting part, because I think that we could be, in a way, seeing a process similar to when mobile phones leapfrogged landlines, in developed countries, right? We could see a process in which countries that didn't have these legacy and legal frameworks all of a sudden can bypass them, right? If they just enable the right trusted third parties in there. I'm talking about minimizing the need for trusted third parties. But yes, I think a regulator will be needed, will be one of the ones needed, indeed.
Can I ask a question?
Sure.
So I'm curious, Adolfo. So, I mean, because the way I see regulators in general is like, they basically have a stick behind the door. Like they can, geographically reach the malevolent actors, and then they can find them or send them to jail or something. And so when we're talking about regulation, of this, like global equities by jurisdictions that are very kind of limited in scope, like, I mean, I guess at what point are we entering more like a kind of a Rothbardian world where it's basically we're building like an insurance company, or it's like, it's actually in a way it could just as well be a private institution, or is it about providing kind of a legal legitimacy for the companies that then support this securities? I'm just trying to understand the nuts and the bolts.
It's the latter, I think, and then the way to do this, it doesn't need to be strictly with using laws like on the hard stick, as you say. There are ways that Sabo envisioned and others, which would include, for example, credit rating systems, crowdsourced, like not having your usual Moody's or Fitch ratings, but something like more crowdsourced that would enable folks to have information, background information on how reliable an issuer is, for example. Or, for example, another idea from Sabo would be like video contracts. That imagine the hash of a video contract where someone explains what the promise of an issuance is, right? So it would be more about having that kind of a framework where these kind of things are possible, and let's say would enable retail investors to use these tools as a way to protect themselves. Actually, if you think about it, the credit rating system is another institution, is another human device protocol or rules that enables us to go to an Airbnb without knowing absolutely anything from the owner or the home, and trusting that if it says that the rating is a 5, chances are you're going to have a good experience, right? So this would be a like to it. And I think that way more research is needed, of course, and we are at very early stages, but the ideas were along those lines.
Interesting. Yeah, it reminds me of arbitrage as well, where a lot of company will opt in to, if we have a conflict, there'll be an arbitrager rather than an official government court that's going to decide over what's going to happen. And then you can put value at loss in the contract so that the money's already there. It's just a matter of who is it going to go to.
Exactly. I think that the winner in the jurisdictions, it's going to be that jurisdiction that understands that having the most trust minimized system, let's say, that requires the least institutions and minimizes the need for those institutions, is going to have a level of flexibility that will be impossible to compete with, right? But again, that is going to take a long time, and until we get there, there are so many assets that can be issued already now, right? And Jesse knows very well. There are so many things that can be now done right now that this research can, in my opinion, take place in parallel. right? As we keep growing this number of assets and interesting things that can be done on Liquid.
What are some examples maybe you could mention, Adolfo, of some of these interesting kind of new assets that are being issued? Maybe Mithiel is a good example.
Yeah, Mithiel for me, actually, it's interesting because these papers and documents that I've been reading, I started discovering them at the same time that Mithiel was happening, right? And then all the pieces started connecting, and that's why I started looking back at Sabo, because of some of ideas I had read in the past, and I thought, this reminds me of Sabo, so I have to reread all of this. So Mithiel is super interesting because it is exactly the case that in the Mexican economy, the promissory notes are a very frequent instrument, debt instrument that is used by the entire economy, right? So individuals, SMEs, large corporations will pay in promissory notes, which are like, think of a check that has some maturity date and some amounts that will be paid in installments in those different maturity dates, right? So it's a super liquid instrument. The problem is that originally, when they were paper, the typical workflow would be that if I'm Mexican, I'm borrowing money to buy a car to a non-banking financial institution in Mexico, I would sign this promissory note. The non-banking financial institution would lend me the money. I would buy the car, but they would keep the promissory note with themselves. Since they were paper, it would take a really huge amount of work to parse all the information in all the papers, to use them as collateral by having a proper custodian of these physical papers that are very valuable, and also to transport them securely to another company that would like to have them as collateral again. And again, these documents are very interesting because in Mexico they have very strong legal security. If you don't pay one of these documents signed by yourself, the Mexican law will go after you in a matter of weeks, right? So they are extremely liquid and extremely valuable. So when these papers were turned into digital form, the problem was the opposite. The problem was that nobody would trust each other at the time of knowing who owns what. How can I be sure that you don't own this promissory note, that you haven't made 1,000 copies and sent them around? So nobody trusted each other. And interestingly, there was no law mandating those entities working in this market to coordinate around a national stock exchange, a clearinghouse, a central security depository, or any of the usual institutions that take part in one of these financial markets. So that's exactly where a blockchain makes sense. That is exactly where a blockchain can enable the coordination between the different entities participating in a market that distrust each other using digital assets. And then Mithiel came by and they say, okay, we have all these promissory notes in digital form. Let's issue an asset on Liquid. Let's embed the tokens ID in this digital promissory note. And then they did something very important, which is getting validation from the Mexican law that the owner of the token would be the legal owner of the promissory note. And all of a sudden, you have a massive market that is growing like crazy. We're already above $1 billion in promissory notes in just 1 year. And basically, this is mind-blowing to me because it's basically opening the doors to non-banking financial institutions in Mexico to global liquidity. I mean, they would otherwise not be able to lend money to their customers. They would have to stop operations, right? And we all of a sudden have US banks and US funds lending to these people. And we have plans to tokenize the fund to enable retail investors to have access to this interesting asset, right? So it's a really important, great example of how to turn assets that are very valuable, connect them with the laws through computer networks, with legal frameworks, and all of a sudden have everyone interacting across borders.
Adolfo, can you spell Mithiel? And also, what kind of dollar returns are these investors getting? I'm just curious, like what interest rates and stuff.
Yeah, Mithiel is spelled Mifiel. And and the returns are in the low double digits, but there are several categories because, of course, individuals pay higher rates. They are more risky as well, of course. And then SMEs, but you could say the range of returns in USD denomination would be around low double digits, 11, 12, 13, 14% returns. Yeah.
It's so exciting to think about this because there's, clearly there's demand for dollar loans against Bitcoin collateral, but what seems to be lacking is a kind of a global benchmark, like a market that makes this global. Because I mean, dollars are digital and Bitcoin is digital, so why can't you have just a global interest rate? But this seems to maybe be the connective tissue that can make that happen.
And I think it's also interesting to say that Mexican law inherits parts of the Spanish law, and the Spanish law inherits parts of the French code. And that means that if a government or a regulator would be interested in replicating this use case to enable global finance connection, it would be quite, I mean, my understanding from the legal people I've talked to is that it wouldn't be very difficult, to change the law in 2 or 3 ways very quickly to make this happen across all those jurisdictions, right? So I think that potentially this could be very large. And I mean, El Salvador is definitely going to make the right changes to make this happen. But there may be other countries. And interestingly, not only other countries, but also other negotiable titles of credit, the other similar assets within the law that can be used in a very similar way. And we are already looking at things, and the law in Mexico has already enabled other use cases. So chances are things are going to be happening within the next few months. It's very interesting indeed.
Wow.
It's interesting that a lot of this stuff is coming from small and mid-sized economies, right? So Bitfinex Securities, of course, we're registered and regulated in El Salvador. We're also in the Astana International Financial Center in Kazakhstan, which are both, I think, people from traditional finance would probably consider those to be kind of peripheral jurisdictions. And we have, mentioned what's happening with MIFIL in Mexico. It seems like a lot of the really interesting application of this technology is coming from small and mid-sized economies. So do you think that that's just inherently how this opportunity is skewed, and it's really an opportunity for these smaller economies versus, the G7 or the global north that is more established and probably has a different kind of risk-reward consideration and much stronger incumbents?
Totally. That is exactly the way I see it. And the reason is because, during these 2 years at Blockstream, I've been traveling to all these financial events and trying to understand what is their point of view, where they see the value is of using a blockchain. And one of my conclusions is, or several of my conclusions are that, first, they are in the know who to trust business, right? They are not in the minimize the need for trust business, right? And that is a huge difference. Secondly, when you already have the laws and regulations in place, as I mentioned earlier, the incentives to disrupt that a regulator is going to have to disrupt itself are tiny, right? Nobody is going to do so. And that's why when I attend these conferences, they're like saying, yeah, we have buggy smart contracts, this chain has been hacked 2,000 times. And I'm like, don't you have any problem with that? No problem. We are going to regulate it all, and no problem. And then I'm like, you're adding laws and regulations and the need for more things, which is precisely the problem this is meant to solve. So you're not going to get anywhere if you go along those lines, in my opinion, or at least this is my thesis right now. And what I see is that in these kind of economies that you mentioned, as long as, regardless of whether they are small or mid-sized, as long as they don't have that kind of opposite incentives in terms of large regulation, large enforcement, particularly in financial markets, and as long as the people in charge have the right vision, I think
that's the key thing. I think that's really the difficult thing to find. There's
exactly.
only one President Bukele. There's not very many people like that.
Exactly, but the chances of Bukele, attracting so much wealth and business if they do the right things, and I told you I'm meant to travel to El Salvador in a few weeks because I'm all in with this strategy, right? And I want to talk to these guys, and so basically what I see is that with the right vision, the right understanding of the importance of having security, basically, because that is what I don't see in Europe or the US. I don't see people focusing on having security, and therefore, again, they have to regulate it all, and then they are not solving any problem. They're just replacing the need for laws with replacing the need for other different laws, but not eliminating them whatsoever. And I think it's fascinating because with this misunderstanding, these smaller jurisdictions have a really big chance of attracting a lot of wealth, and that for me is fascinating.
Adolfo, can you just clarify? You said I think you said you were talking to like regulators from like advanced economies, and they were admitting that their private blockchains are getting hacked?
No. What I mean is that I don't mean I talk to regulators in advanced economies. What I mean is that when I go to these events, they are like, yeah, we've been doing these proofs of concept, and well, we got hacked, or perhaps a drug organization or a terrorist organization sent us a transaction, and yeah, it got mixed with our with our funds. And I'm like, you would sort that out instantly with a UTXO model blockchain. So why are you not looking into using security in the first place, right? And I'm like, so when I ask these people, why are you not concerned about these kind of problems? And they're all like, well, first we know who to trust, and we are in the process of figuring out who else we need to trust within these new systems. And secondly, yeah, go ahead.
Well, I was going to say that I think there's a lot of smoke and mirrors in this stuff. So when we see the tokenization that's being done in a lot of major economies, it's not probably what we would consider at Bitfinex Securities to be tokenization. It's a lot of smoke and mirrors, and I think it's a lot of innovation where nothing actually changes.
Totally.
So it's almost like we technologists are like, but why do you have so much bloat? And they're actually, what they're not saying is like, well, we're in the business of rent seeking, and so like, how can we have rent seeking without the bloats?
Exactly. No, but to me, I mean, at first, it was a little bit frustrating for me because I was, of course, when I joined Blockstream, the first thing you do is, hey, what is the money, right? I started smelling, what is the money? The money is in TradFi, right, in the EU or the US. But then the more I was there, I thought things were not adding up. And so now my attention has been, mine and Iver, we work at the BD at Blockstream, our attention has switched completely to LATAM and other developing countries, because that's where we see a lot of action is going to be happening. And also we try to connect what is going on in there with still institutional investors that have appetite for this kind of assets, and even if they are in the US or EU, right? And things are happening along those lines. But it's definitely interesting to see that, yeah, it's mostly innovation departments issuing with the right hand, buying with the left hand, not really, nothing trading really, not really liquidity, not solving any problems. And then you're switching your looks at BFL and you see, this is really solving a huge problem. Why am I not looking more into this? And then all of a sudden, these pieces come together and it makes a lot of sense, in my opinion.
Well, I think another thing that they're probably trying to solve for is that with tokenization, they can then fire half of their back office, if not all of their back office. And then there are benefits on the trading side, right, for tokenization, the 24/7, 365 trading, real-time settlement, all of that stuff. It's kind of a funny situation. I often think about, like, you've got these two kind of competing ecosystems, and in a lot of ways, they don't really overlap too much. I guess they're starting to overlap a little bit more now. And in one of them, you have a Tesla, and the other one, you have a horse and carriage. And the horse and carriage is telling the Tesla how it should, kind of organize itself. Because we've got most major exchanges, conventional securities exchanges, they have, trading hours. In Taiwan, it's 9 to 1:30, right? And you don't trade on weekends, and you don't trade during Chinese New Year's. And if you sell your TSMC on Friday, it settles next week because it's T+2 and you get your money next week. But if you're trading on Bitfinex securities, as soon as you sell, it's real-time settlement and you get your cash. And I think there's all kinds of benefits there for not only risk management, but also for capital utilization, and you can churn your money more often. And I think that's probably very attractive to hedge funds and a lot of big money.
Let me explain it in another way. I still think that the improvements in terms of efficiency of this system of using liquid compared to TradFi are very large, and it will grow. But if they don't figure out the importance of security, chances are that the liquidity is going to keep growing in isolated silos, right? So they will be using 10, 20 blockchains, and therefore the incentives for other players to join them will be small. While if you focus on liquid by being ultra secure paranoid, focusing on solving problems where they are needed the most, my view is that liquidity is going to grow there, whatever, either if you want it or not, right? And then it's going to be about time. At some point in time, I think that players here in the West are going to start looking at what is going on here. And whenever I tell them about this use case, about the promissory notes, their eyes are like this. What? Excuse me? I thought the largest thing that had happened was this 50 million bond, issued by whoever.
Well, the thing is that it happened completely organically and under the radar and with zero marketing. And that's a beautiful thing, which is complete opposite of what happened with IPOs.
And it's an important signal because it means that there's real value.
Yes.
If you can do it without PR and marketing, it means there's real value.
Totally. The way I see it, yeah.
So you talked also about, this is a point that I've made before too, is that by embracing this kind of, so I think El Salvador has kind of set out a template, right? So step one was the 2021 Bitcoin law, where they adopt Bitcoin as one of their national currencies. And then step two, I think, was setting up the digital asset regime that took some time. It took a couple of years. And I think that sets the stage and a template where countries can start competing kind of asymmetrically with major financial centers. Do you agree with that, Adolfo?
Totally. I mean, you think it's super asymmetrical because you are comparing institutions that took centuries to evolve in a process of error correction. Basically, okay, these rules don't work, let's change them. Okay, these rules don't work again, let's change them. That process took centuries in the West. So
and it's organic. So you get a lot of like really weird kind of developments and intermediaries that aren't really necessary as technology advances.
Exactly, and frequently they don't want again to disrupt themselves. So they stay in there even if they are not that needed. But it's a capital, it's a knowledge capital that takes centuries to grow. And that it's unlikely to happen anytime soon in any country if they want to follow that path. So all of a sudden, they have an opportunity to grow with a number of assets where perhaps the number of, this process of translation, of digitization, of adding assets to the computer networks on smart contracts that represent these rights and obligations. Even if we don't go the path of the super advanced stuff, there are so many things that can be done already now that if by leveraging these computer networks, which we now call blockchains, we can really help a lot of countries, bypass competing. Let's say, before I used to say competing at the same level, but I'm starting to think that they will have an advantage, themselves. Mm-hmm. So yeah, the opportunity is massive, but then again, you need the vision and the right people to be in charge to understand this. Because if they don't, you're only going to have tools that will not be used by anyone. So yeah, I'm looking forward to having that conversation with El Salvadorian guys.
Adolfo, I'm curious, how does the El Salvadorian government justify this financially? Like, do they get some kind of, is there at least a future stream of revenue in this for them, or how does that work?
I don't know yet, but I wonder this as well myself, and I think that the way forward, or the way I would do it, is by attracting companies. Okay, you want to issue here, you have to establish yourself here, and at some point I'm going to get taxes or fees or in one way or another.
Mm.
And that is a pretty decent
so like
business model.
freemium or something, like
A
it's free
freemium
first and then eventually you upgrade.
Yeah.
Well, I think so. The regulations as they stand now, you don't need to register in El Salvador. I think they can just use the El Salvadorian entity, the jurisdiction, as kind of a booking entity for all of these tradings. I think the benefit for them is that they have, capital markets and financial services are a very, very small part of their GDP. I think it's relatively non-existent, and the banks also don't do a lot of lending. So I think this is a problem that I've found out is that. There's a problem kind of globally, and this is a problem that MIFIL is trying to solve, is that the banks aren't lending. So you have all these non-bank entities, whether it's microfinancing or promissory notes, that are actually doing lending because people still have capital needs. It's just not being met by banks. So I think that's part of it, is getting better access to capital, which then can start, people can start businesses, build up businesses. And that kind of dovetails with their marketing campaign to Bitcoiners and encourage Bitcoiners and technology people to come to the country. And then you can get, better access to capital and lower taxes. So I think it's all of those things, and it's building up capital markets in a place where there's no capital markets. I think that's the upside to them. And then all of the kind of peripheral benefits that ripple out from that, like creating industries where you then hire people and stuff like that. We're going to do a bond issuance. I think hopefully we'll announce it next week for a kind of a traditional infrastructure company. And if that gets approved, that's a company that's got capital, and then they can start building stuff in El Salvador, and then they hire people. They need construction workers, and those jobs ripple out throughout the economy.
Awesome. No, that is awesome. I in fact, now that you say that, Jesse, you remind me that I had a conversation with someone in El Salvador that when they understood the MIFIL use case, they just wanted to have it overnight, because they described exactly what you said. They said, our companies don't have access to global liquidity.
Yeah.
And we can make the debt law-wise, legally-wise, valuable. So if we make these kind of changes that the Mexican law has implemented, so we have to do this.
Yeah. Tuur, what is kind of your evaluation of El Salvador, after 2 years now? Or I guess 3 years since the 2021 Bitcoin law.
Yeah, I mean it's fascinating. I mean, like I think it's surprising to me how like it's been, the idea that it was a gimmick has been debunked, I think, by now. Like there's more vision there. And I gotta say, like I was also skeptical of like, what is the long-term implication of this? I still have some concerns about like continuity, like, what happens if there's a new president or something, and like in general, like what about, and this is probably, who knows, maybe it's my my bias from being a Westerner, quote unquote, or something, like about just the kind of the court system. How does that work? What if there's a real world conflict? Yeah, real world dispute resolution. I mean, to be fair, I'm I now living in Texas, I'm more and more skeptical of how problematic the European court systems are. Not that it's perfect here, of course, but so yeah, that's just, law and order is just a general thing that I wonder about, and that I wonder, like, if they're going to like really move forward, like is there going to be some kind of reform as well in the court system, or is it just like it just needed more human capital, more financial capital to kind of bring it to the next level? Or it's already good and I'm totally, out of my league to even, anyway, those are just thoughts that I've been having, but I've definitely been impressed with the kind of continual steps and the kind of what looks like an eagerness to learn, to do things differently. I'm almost like, I don't know, it's like, I kept thinking as we were talking about how, the whale oil industry was a big deal for a long time. And like, if you wanted to have a candle at night, like that was the one source to go to. And then it was totally disrupted, not by other guys who are also in the ocean, but just guys who are like, walking around in Pennsylvania finding this black stuff coming out of the ground. And it got annihilated. Like it totally annihilated the whale oil industry. and it became a lot bigger. Like the petroleum industry is so much bigger. So I don't know. I'm just kind of like amazed that like literally we're finding value on the other end of the curve entirely, like where there's a desert, liquidity wise. It seems like there's so much to unlock all of a sudden.
Yeah, no, it's very exciting. I think we're definitely still in the very early days, but there's a lot of exciting things going on. What about the ETF? Maybe shifting gears slightly. Do you feel like that is maybe a step in the wrong direction? We're talking about kind of trust systems and decentralization, and it seems like you're taking the world's most decentralized asset and we're centralizing it and spoon feeding it to Wall Street and pensioners. What are your thoughts on that?
You're asking me?
Yes, well, either one. Yeah.
Well, maybe I'll go first. To me, it's like, it's kind of like, what a great instructional tool to show the world the risks that come along with, like, you know, like Nick Szabo's trusted third parties are security holes. What an amazing global lesson that, you know, we're being set up for, because, you know, everything, it's like that cartoon where there's like this giant construction and it's all resting on this tiny little pillar at the bottom, because, you know, all these funds, except for Fidelity's, but all these funds are custodying with Coinbase, and Coinbase is not insured. I mean, yes, technically yes, but it's like less than 1% of their assets are actually insured. And if you have an ETF share, you share the insurance with some guy who bought some Dogecoin or another, you know, excuse my friend, shitcoin on Coinbase. So it's just like an accident waiting to happen. So, but I think it's just part of the growing process, and there's going to be growing pains. And this is like the teenager stage where, like, you know, the 13-year-old is jumping in the car, and yeah, he's going to crash the car, but it'll help him learn the lessons that he needs to learn. Is kind of how I look at it. So I'm just kind of excited that, like, yeah, more people are excited about Bitcoin, and if this is how they want to get involved, like, I mean, let's just be kind to them and help them understand that there's other options.
And do you think the Bitcoin ETF will help get more people into proper Bitcoin, into real Bitcoin? Because I've always felt that Bitcoin is kind of like a Trojan horse, where you invest in it, number goes up, you make a ton of money, and then that pulls you in and you learn more about it. So do you think this will encourage more people who hold the ETF to start understanding it and then understand the benefits of self-custody and personal sovereignty and all of these things that kind of Bitcoiners hold dear?
I agree with what you said, except when you said that pulls you in, I would replace that by, and then you get rug pulled. And then you get involved, and then you spend some time like being depressed, and then you get back involved.
So it's a carrot and a stick. Yeah.
Yeah. And so, yeah, I mean, Bitcoin is a harsh master. You know, it's like there's amazing benefits, but then you got to take the responsibility of trying to work with good technology and reliable parties. Yeah, no, I agree. This is part of the even buying a share, you know, you're invested, you know, even if it's a promissory, what do you call it, an IOU, basically, you're still emotionally, you've made that, you crossed the Rubicon in a way, and you're kind of psychologically, you're in Bitcoin land.
What do you think, Adolfo? Do you have any thoughts on the ETF?
Yeah, I mean, I'm totally in favor of anyone having exposure to the asset in whatever way they fancy, and I think that, yeah, I mean, you can enjoy Bitcoin as private property without the need for laws. That's the way I like to describe it, and by the way, without the need for laws. That links to the other conversation. But if people just want to have exposure to an asset that, you know, with minimum inflation, minimum deterioration, and with a little bit of counterparty risk, and they're happy to accept it, you know, I think I mean, it's up to them. But yes, if for whatever reason there is a problem with so much counterparty risk being on the hands of only Coinbase, that is going to be the biggest lesson on why perhaps not accepting that kind of level of counterparty risk is not such a great idea, right? And but yeah, that's the way I see it.
Yeah, because like if you think about like how much Bitcoin is now under custody with Coinbase, is it like 30 billion or something?
I'm not sure. I mean, it's 90% of the ETFs, isn't it? I think that was the figure.
Yeah, I think maybe So what if the price goes 10x and then you're talking 300 billion? Like, this is like literally any kind of nation state. This is a perfect target for attack. Like, so you have a private company that's now exposed to nation state attack risk. And I'm not saying, that, I mean, so basically, there is a kind of a way through this, I think, that does not involve catastrophic hacks, where you kind of add insurance along the way. Like, you figure out a way to do custody insurance, and especially now with the I know it's new technology, but like what's being enabled with Miniscript and stuff, that you can have a multi-sig quorum, and then if certain keys are seemingly compromised, you can then bump it back to another quorum that has different signers. Like, all that is like, that's what insurers want to see. So maybe gradually the ETFs could start adding insurance, and thereby making that risk less intense, like the risk of seriously getting hacked. Because I don't believe U.S. regulators are going to bail out a Bitcoin ETF. The Federal Reserve is not going to do that. The government is not going to do that.
No.
Unlikely.
No. And another thing I wanted to ask you about too is, I think last time we talked, Tuur, which was probably a couple of years ago, but we talked about the transition to Hyperbitcoinization. And I think the ETF is part of that, because securitization of Bitcoin was always going to happen, just because there's mandates and regulatory restrictions, and it's difficult for mainstream institutional investors in places like the US to get access to Bitcoin, which is kind of funny because it's easy for us average investors to get access to it. And we talked about what hyper-Bitcoinization looks like, and how there's going to be a transitional period between the system we're in now and then the system of a hyper-Bitcoinized economy, and how there'd be probably quite a bit of chaos between the two. What are your thoughts now? I mean, it feels like we're living in very chaotic times. Are we just in the middle of this process, do you think, and this is something we just have to work our way through?
Yeah, I think so. It was hard to imagine before, but I think it's starting to take shape, where the fiat system is really running into some rough waters. I saw, you probably saw it too, that the US is now on track. US government is now on track of, instead of paying $1 trillion in interest payments per year, it'll be 1.6 trillion by the end of this year. So these are just staggering numbers. I think it's like 36% of tax income right now that is going to go straight to paying interest rates. Any kind of private entity would have long gone bankrupt with that kind of thing, the kind of situation. So yeah, on the one hand, there's that like crumbling fiat system, and on the other hand, Bitcoin is maturing very quickly. It's also equally kind of staggering to see, because I remember very early on in, already I believe in 2012, you saw the first Bitcoin denominated stock markets like that. It was a GLBSE. There was a guy who was in the UK. Then you had Mircea Popescu in Romania, and then you had Cavirtex, which I think was in 2013 in Canada. That was the one that probably ran the longest. And so you could buy like equity in mining stocks, and it was all very murky. But that was like the seed, right, of like, this is what Bitcoiners want. Is like, we want to be able to deploy our capital in the asset markets. But now, like, talking to you guys, it's like, wow, we're clearly kicking into, like, we built all this infrastructure. I don't want to say we, these brilliant developers built all this infrastructure, and now we have a level of maturity where the dream can be realized. So yeah, it gives me a lot of hope, to be honest. Like, because I was, for years, I was so worried that we were going to have the Latin American cycle of like every 10 years you get a hyperinflation, that was going to come to the West with all its military power and all its volatility, and so now we have like there's like a safe haven for capital to go, and I think it's going to give people a lot of relief. And as hopefully economies will start to learn and gradually get more involved in this new economy, so that we can have more of a a less dramatic transition and a less chaotic next 10 years. I think so. I think Bitcoin is going to help kind of soften the landing, if you will. But unfortunately, yeah, it's going to be volatile, no doubt about it.
Yeah, that was always my hope with Bitcoin too, is it would be kind of a relatively, painless and not so much blood on the street way to let some steam out of the system that had obviously built up a lot. And I think that was probably Satoshi's original hope too, when you look at the Genesis block and how it was clearly, a reaction to what happened in the 2008 financial crisis.
Absolutely.
Oh, all right. Well, good stuff. I appreciate your time, guys. I think we're running up on time. Tuur, where can people follow you, learn more about you, and what are you writing about in your newsletter these days, and how can people get access to it?
It's funny because I've been saying for 15 years, oh, just Google my name. Like Google is just getting less and less reliable. It's like a tool to do that, or people don't need, like, ask ChatGPT about me or something. Is that what I need to say now?
Right. That's Gemini. Yeah.
Yeah. I mean, my reports are at adamantresearch.com. There's an archive of my report, and I'm active on Twitter, and I'm working on some things in the long form writing realm, but that's not public yet. But yeah, there's stuff happening, and I'm also speaking. I'm speaking in in Prague soon. The conference in Prague. I will very likely speak in Buenos Aires, and I'm looking into a few other conferences still. So hopefully I get to see some people in real life.
You've got to come to Plan B. We want you to come to Lugano.
Yes, I absolutely want to. Yeah.
Me too. I will not miss this year.
That's great. Adolfo, where can people go to follow you? Are you on Twitter?
Yeah, no, I quit because it was so demanding, but I am frequently on LinkedIn, because I think it's where most of our market is, but secondly, because I think it's where many of the more Bitcoiner ideas make more sense. There's more need for them, or there should be more demand, in my opinion, but I don't get paid that much attention, so perhaps
better to be under the radar. Yeah,
exactly. But yeah, I also write on the community Ball 2. Okay, the build on layer 2 community. So perhaps somebody can share that link and people can sign up to read what we discuss in there.
Sounds good. Well, I really appreciate it. It was a great conversation. I look forward to talking to you guys again and hopefully seeing you in Lugano in a couple of months.